Hi, everybody. This is Gary Dean, and this is our Innovative Report for Tuesday, November 15th, 2016. So the polls put in a pretty good show today with the S&P. It seems like money is rotating. The two indexes that are kind of that they're linked together is the Dow and the small caps, and that's primarily because what I had mentioned the other day, where the banks are Trump win bullish, and biotechs are Trump win bullish. So they're kind of running together right now. They didn't really go up as much as they've been going up, but today we saw really the strength or the money shifting from. Not really shifting that much, but I mean the Dow was red. But anyway, we saw money rotation into the Nasdaq and the S&P. My take on this is it's a shorting opportunity, and really the main reason is that none of the indexes are not all on the same page, and with that, it's not a very clean running engine. It's some parts are working harder to bring up the other ones, and eventually what happens is it just runs out of gas. Now I'm not going over and saying that I'm overly bearish on this market. I think that the way that I'm looking at it is the next trade setup, and I believe that there's going to be more points to the downside than there is the upside, and that's why I'm looking short. Can it turn into something else, and we go into extreme bearish moves? Yeah, it can. I'm just not really banking on that right now, especially with we have the center rally that's going to be pending. I don't think this is it. I know we're probably going to get some people that are going to start saying it, but we'll see what plays out. That's really neither here or there. So what do we know today is that we did see the big boys that were selling, as you can see. Here we had minus 62 on the money flow, and I just lost my space. Okay, and then the ticks, you can see the ratio on that was minus 41. So we saw some selling today from the big boys. It wasn't it wasn't at that extreme where it was in the number one spot, but we just know that with the strength today, the big boys were selling. So let's take a look at our regular charts. I had mentioned they may come up and do a back test of this broken wedge right here, and if they do that, that would actually make a very, very minor new high. We're not that far away, so maybe they do it. I'm not sure they have the power to do it, but we'll kind of have to wait and see. You can see momentum's above the neutral line here, so we're approaching the overbought levels. And again, the back test of this wedge, it's actually pretty common for this pattern. And when it does, so we're still looking at the targets down here, but that may not take place until sometime in 2017. So 60-minute chart. This was the really the reason why I believe that we're getting at least some type of pullback that's pending, and especially if we push above this the 2083 level, 2183, because that's going to then give us another set of bearish divergences as we're very, very overbought. So it's done a pretty good job getting through these the resistance levels here, but the thing is even getting through there, all we're doing is really just taking this one that it got through and putting it up to the next one. So this is a whole lot of resistance they got to get through, and the fact that all the indexes are not on the same page, I don't know, how much money's going to be flying into it just because we're up at these levels. So the reason that to try to make sense of that, like the past few days, we've seen the S&P that's been pretty weak, but it's been hard to short because you look over at the Dow and it's up 200 points, and the Russell 2000's up almost 2%, but yet the Nasdaq and the S&P were weak. So mentally it plays a game in your head, because you're like, do I really want to short, because is the S&P going to turn and follow the Dow? Well, the same thing happens when it's going up. I mean, for most of the day today, the Dow was weak. It had a little spark at the end, and that's what got the S&P up 16 points. But my point is, the fact that we are seeing the Dow that's starting to weaken up a little bit, are we going to see a lot of new money that's piling in, especially if kind of tomorrow we have a similar situation where the S&P is green and the Dow is red. So it plays games on the mental aspect of things, because you're not sure if the S&P is going to start following the Dow to the downside if it stays weak. So anyway, we have resistance. We're right at one right now. That's the 2183. If it gets above that, then we're probably going to see a move to the 2188, and then we have the all-time high at 2194. So it's still, even though it's worked through these levels of resistance, it now has another one, and we're very, very overbought right now, and we're going to have some bearish divergences. So that's one of the reasons why I'm thinking that we have more room to the downside than the upside. So a typical retracement from these levels, depending on where it is, if it's from here or we have to go up a little bit higher, it's going to be someplace between, say I would say the 2144 to the 2132, with a good shot of it coming down all the way to these levels here, because this has been a pretty extended bearish divergence in place. Very, very overbought. Well, we had the quick dip, and now we're back into the overbought levels. So, in the fact that we are in this triangle typically means that this is your final push before we get a retracement. So I think if we do get the pullback, we'll probably find some support in this area where it might bounce back up. But the ultimate target is probably going to come someplace down into between the 2132 and the 2104. So right now, I have a half a position from yesterday. Like I said, I just wanted really some skin in the game. I'm waiting for this to die out before I add my second position. So I may not even take it until tomorrow or something. I have to, or it may wait until Thursday. I want to make sure that this rally ends. It seemed like it was pretty weak. That's why I took the half a position. And looking back, I probably wish I didn't take that. But this is the way it is. You layer in, and once I get a full position, I'm going to put my stop in place and see what happens. If it doesn't work, it's not going to be the first time that I've taken a trade that hasn't worked, and it's not going to be the last time. This is the stock market. You try to take some educated guesses on the direction, and the way that I'm looking at it, I'm still thinking that there's more room on the downside than there is the upside. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.